First, let's get these numbers, Rick, and see if it's starting already.
Yes, this is a big March jobs report. Non-farm payrolls beats estimates. 228,000 jobs. That would be the strongest this year, and it would comp to 323,000 in D's of last year. There is, however, a minus 48,000 two-month revision, minus 48K. Now, let's go for the unemployment rate, shall we? Expected 4.1 moves up to 4.2. That equals where we were in November. To find a higher rate, you're going to October of 22. Now, let's look at earnings, shall we? This is month over month. Comes in exactly as expected at 0.3 and exactly is in the rearview mirror. If we look at a year-over-year perspective, it's coming in light. 3.8%. We're expecting 4%. 4% was our last look. 3.8. When was the last time we were at 3.8? Well, 3.6 is our comp. That's July of last year. So we have been there, and we have softened and come back before. Yes, July of last year when it was 3.6. Now, let's look at hours. Hours for all employees. 34.2, which is what we expected. That's up a tenth. That's good news from 34.1, equals where we were in D's. To find a higher number, you're in Nova of last year. Labor force participation rate coming in at 62.5. That is indeed good news. It's up a tenth from both expectations and the rearview mirror. 62.6 was January, so we reversed that 62.4 that was down in the middle there. And finally, the last number, U6, or the underemployment rate, that comes in at 7.9%, down from 8%. That 8% level we had last look was the highest since October of 21, so it's nice to see that. It was 7.5 in January of this year. Of course, this report, in my opinion, has some good aspects to it, but I think those will be diminished. I think the market would only react to more negative aspects considering the recent news. And very, very quickly here, I went back and looked at the crash in '87 from October 19th, 7 sessions. We went from a 10-year of 10.23% to 8.72%. In 7 trading sessions, that's a drop of 15%. If you equate that to our last peak now in 10s at 436, it arrives at a number of, drumroll, 3.71% on a 10-year if we keep the same stencil as the crash in '87. Back to the panel.